Hello everyone. So welcome to your own YouTube channel Investment Wala. Today's video will be about momentum investing and we will be sharing the exact setup that we have been following for some months to capture multi-bagger stocks, and we will be sharing the exact setup in terms of the entry, the stop loss, the targets, and how to trail, right? Also, we will be sharing how to pyramid the winners with an example of our own trade Adani Enterprises. There are many more examples which we'll be covering in subsequent videos. So for now, we will be sharing our exact trade of Adani Enterprises, how we enter, where we entered, and how where we booked targets, and how we trailed, and where exactly we pyramided our positions, right? So before starting the video, I would like to tell you about our Telegram channel and the Telegram group that we have. So this is a Telegram channel where we share all the trades and education related to stock market. So if you haven't followed this till now, then please follow our Telegram channel. And also, if you want to discuss about your views, or have your doubts related to stock markets, then this is a Telegram group where all the fellow traders who are interested in trading, they share their views and discuss their doubts and everything. So please follow us on Telegram, right? So let us start the video. So what exactly is our setup all about? So as I mentioned earlier many times in on a Telegram group, that we trade only the strong stocks. That is, we don't trade a weak stock that has fallen too much, or we do not try to catch a falling knife. We always try and stick to the stocks that are beating the index returns or have the potential to go up. Also, I would like to tell you that we don't do any fundamental analysis here, and we believe that price incorporates all the news, price incorporates all the fundamentals of a company, and there's only one reason that a stock goes up, that is when money is pumped into that stock. There's no other reason apart from this, and if someone is pumping money, then all the good things will be incorporated over there. So if the fundamentals are good and the big players know about this, then definitely they will pump in money, and you have to just ride till the trend lasts, right? So would like to tell you that we trade only in all-time high stocks, and the second thing that we need to know is about 20 exponential moving average, and the third thing is 10 exponential moving average. You need only these three things to know before you start trading this setup, right? There is no fourth thing about trading that you need to know if you are trading this setup. And I can guarantee that if you follow this setup religiously, then you can make decent and good returns from the markets, even if the market is sideways, because a stock will give you signal only when it has to really go up. And if it doesn't go up, then your SL will trigger. And uh, this setup ensures that your risk reward is intact and you just make huge exponential returns when you are right, and a small loss when you are wrong. So you have to just keep your money management and risk management in place, and you will be able to make money from this setup, definitely in long term or medium term, right? So let us start with the setup. So this is the chart of Adani Enterprises, right? So the first thing that we know about this setup is that we trade only high all-time high stocks, right? But where exactly do we enter? So first of all, we need to switch to a monthly chart, right? So this is the monthly chart of Adani Enterprises, and as you can see that somewhere here was a lifetime high for the stock, right? Just before this recent rally that we have seen, this was the lifetime high. So just let us mark this first. Yeah. So exactly this is 362.54, right? Now on the monthly graph, we need that this 362.54 needs to be crossed, and the a candle needs to close above this, right? So as you can see, for almost from 2015 till 2020, the stock was in consolidation. It It was here around 70, 80, 100, 1 200, then all then fell down, then 120. It was in consolidation, it was not trying to go up, right? But here, as you can see, the moment it closed above this lifetime high, so this is 415.5. The high of this confirmation candle is 415.5. You need to wait till the candle is completely formed, right? I entered at a relatively lower level because I just modified this setup in the last few months because I don't want to trade fake breakouts. There were some fake breakouts earlier, but now this setup ensures that you avoid most of the fake breakouts, right? So just check the high of this candle. So as soon as it closed above 362.5, it should be in your market watch list, right? So here we have 415.5 as the high of this candle. Now next month, which is, so this was November 2020, and the next month is December 2020. So you will place an order just above the high of this candle, which is 415.5. So you place the order at 416, right? So you place the order got triggered next month, and after that you can see it just zoom, right? And it went till 1700, right? So now you don't know where the stop loss will be. If you check over here, if you set 20 EMA as a stop loss, then it will be huge, and that means you are looking for a longer period of time, maybe 2 years, 3 years. But we need a momentum trade. We just need to make sure that we do not miss the momentum that's there in the stock. And if it gives multi-bagger returns, then you have to be a part of it, but you don't want to hold it for years, right? You just want to hold it for maybe 6 months, 8 months, 1 year, till the trend lasts. And then as soon as the trend reverse, you are out, right? So over here you will shift to a weekly time frame, right? So now you know that you will be buying this stock somewhere here around 416, right? So you bought the stock at 416. The candle at which you buy, just check the previous candle, right? just check the just check the value of 20 EMA, right? So this was the candle where your order got triggered, and the previous candle is this one where your 20 EMA value is 297, right? You can check the values of 20 EMA over here. So the value over here is 297, right? So your first stop loss, so your first initial stop loss would be previous month, previous week 20 EMA value less 2%. So you need to give a some buffer so that a stock doesn't give you a fake exit, right? So you put your stop loss at 297 minus 2%, which will be approximately 290 or 288 something, right? So you entered the stock at 416, let's say. So I'll just write it down over here. Entry at 416, SL at 290, right? Now let's say you entered with 10 quantity of this stock, right? So now you need to exit some at a predefined target so that your emotions are in control, and then trail the rest, right? So for your first target, so we are not predicting anything that this target will be hit or not, right? We are just saying that you need to exit some quantity so that you make sure that your stock is now stock is now risk free, and you can just afford to trail it till wherever it goes, right? So your target will be 416 minus 290, which is 126 points. So you will add those 126 points in 416, so that comes out to be 542 roughly, right? So we'll just add this target over here. So first target, so first target which is for half quantity, will be 542, right? So as you can see, your stop loss didn't trigger after this candle. It never hit 20 EMA, right? So it went up till over here. You can see the high of these candles. So at this candle, as you can see, your target is hit. 18th January 2021 candle, right? Your target is hit. Now, when your target is hit, now you need to just revise your stop loss, right? You just need to revise your stop loss. You can't afford to have this 20 ms stop loss, because now you are sure that this stock has a potential to go up, but you don't want to lose money on this stock now, right? So at this point you will revise your stop loss to previous week 10 ema, right? So let's say your target is hit at this candle, so your previous week 10 ema would be 455, right? Less 2%. So you are always going to give a buffer of 2% when you're talking about stop loss, right? So 415 minus 2%, which is roughly about 9 points less, which is 446 rupees. So that will be your stop loss. And as the weeks pass, your stop loss is going to change. So it will be always previous week, previous week 10 EMA, right? Your stop loss keeps on changing every week. So every weekend you need to just calculate these 10 EMAs and 20 EMAs, and then make sure that you just put in orders in your system, right? So there are some brokers who offer GTT order facility, and you can just place your order on a weekend and just forget about it, right? So as you can see, it never hit 10 EMA till it went to 1700 rupees. It just hit recently around 1300, right? So if you're liking this video, I would really request you all to subscribe to our channel and just like this video, so that we feel motivated to post more such videos in future, right? So now we will be talking about the pyramiding aspect of of momentum investing, that how you can increase your returns exponentially, right? So so the first rule in pyramiding would be that you need to do pyramiding only when your target is achieved, that you have already booked half quantity, right? So till here 552.95, which is 542, which was your first target, you won't be thinking about pyramiding your position, because you're not sure that stock is really going to go up or not, or it is a fake breakout, or it's just giving a small 30-40% returns, right? So you're not going to think about pyramiding over here. But once your target is achieved, right? So once your target is achieved, now you will think about pyramiding, right? So you won't pyramid when a big green candles are being formed. You won't be pyramiding at that particular time, right? So you just book your profit in this zone. So over here you won't be thinking of pyramiding. You will be thinking of pyramiding when the stock shows some correction over here. You can see that it went up till 945, and then from there it just showed some correction to 840 rupees, right? So what will happen during this 2-3 weeks of consolidation or correction is that your 10 EMA value, your 10 EMA value will always try to go up, because it's a lagging indicator. So when 2-3 bullish candles are made, the impact of 10 EMA would be shown only after the next 2-3 candles are formed, right? So over here, when there's some correction, you will think of pyramiding now. You won't pyramid exactly where the correction is there, because if the correction continues, and it may hit your 10 EMA as well, and you may have to suffer a loss on that pyramid position, right? So you will think of pyramid here. But when next time, after some consolidation or correction, the stock again shows some bullishness, that is the point you have to pyramid, because now you are sure that it is going to give another breakout, right? So if you see this on a daily time frame, you will see that the instead of these two red candles, there may be some more consolidation. So on a daily chart, when uh, after a week or after 2 weeks of consolidation, your 10 EMA value goes up, and after that it gives another breakout. So somewhere here, somewhere around 950 rupees, you will pyramid your position. Now how much to pyramid? See, that's a subjective question, right? So you have to check that what's your trailing stop loss currently. So if I see here that if I pyramid at this candle around 950, 960 rupees, so previous week 10 EMA value would be around 750, right? So which is roughly 200 rupees, right? But I'm also in gain of from 416 till 900, so I've already made more than 100% returns over here, right? In half quantity, right? So I will think of pyramiding at this particular juncture, but the quantity I will decide on the basis of how much I am risking now. So you are not risking anything, you are just trailing your profits, right? So maybe you can just calculate how much risk is there for a new pyramided position, and on the basis of that you can decide your quantity. But try to not scale up more than 25 to 50% of your current holding quantity, right? Right, so don't increase your position to maybe double or triple at this point. Just increase your positions in a slow and steady manner. So if you are holding five stocks, maybe five quantity, so maybe you can pyramid by buying more two or three quantities, right? So now your pyramid level is around 960 rupees, so you pyramid it at this point, right? Let's say you pyramid at rupees 960, right? So now after breaking this high, so for this 960 as well, your trailing stop loss would be the same, 10 EMA value of previous week, right? So you are going to continue holding your position now, right? Now you can see that somewhere here, it showed some consolidation again. Even if these three, one of these candles is green, but it showed some consolidation, and 10 EMA value was still zooming and it went near your 10 EMA value, right? So these 3 4 candles, this is a point where you will start thinking of pyramiding your positions again, right? So you won't pyramid at as soon as it shows some consolidation. You need to wait for the confirmation of breaking out this candle, right? So so over here, your new entry, your new pyramid position would be around here, somewhere here after these 3 4 candles are formed, right? Okay, one more thing I would like to tell, that you will think of pyramiding your position again only when your initial pyramid position is now free of cost. So how will you get to know about that? So pyramid at 960 rupees, right? So as soon as your trailing stop loss is more than 960, only then you will think of pyramiding your position again, right? So over here you can see that your 10 EMA value is around 1024 and 1074 at this juncture. So your pyramided first pyramid position is now already in profits, so you won't be making any loss in that, right? Even if your trailing stop loss is hit, right? So after these 3 4 candles are formed, you will pyramid your position again over here, right? So I'll just mark this. Yeah, somewhere here around 1260 rupees, right? Now many people think that you should be holding the maximum quantity at lower levels and your highest quantity at maximum quantity at lower levels and your lowest quantity when the stock is at higher levels. See, we think the opposite way. You should hold your positions the lowest when the stock is at lower levels, and the highest when it has the higher levels, because that's the point you'll be able to make exponential returns, right? You started with some quantity and you just keep on pyramiding your positions. Then imagine, even if a stock moves by 10-20% at after pyramiding 2-3 times, then how much humongous returns it is going to give you, tremendous returns it is going to give you, right? So that is the point. You need to have the maximum quantity, right? So initially, if you would have stayed with the same quantity from 500 142 to 1260 rupees, then you would have gained of around 700 rupees per quantity, and into 5, which is 3500. But when you pyramid, you just keep increasing your returns, right? So keep on pyramiding, and you need to make sure that the high at the highest level you need to have the highest allocation, right? So recently, this news of after this news of Adani Enterprises, the stock crashed one day, and maybe it don't didn't want it to crash or something like that, but it did crash, and we as traders had to exit our positions, right? So over here you can see it made a high of 1713 and 1717. So it made a lifetime high of 1717, and on one Monday, on in mid of June, it crashed 25% in a day. So that was a day that I had to exit my positions. It led to some slippages because the stock was tanking, but I exited it around 1300, and after exiting, I didn't even look at the stock now. So I exited at 1300. So from 416 till 1300, so you have made more than three times, right? So you have made more than 200% returns in only one stock, just from December 2020 till June 2021, right? So you just exit this stock. Now your re-entry would be only after a weekly close above this candle comes, right? You won't be thinking of entering the stock again now, even if it crashes, or you think that you are getting it at cheaper levels. No, you won't be looking at the stock. There are more than uh, what one has to stay, more than enough stocks to trade, and you will be getting opportunities everywhere. So don't look at the stock now till it crosses this lifetime high again. It should give a weekly confirmation above this candle, and only above that you will be buying this, right? So for the initial quantity, we made around 200, more than 200% returns. For this one pyramid quantity, we made around 30%, more than 30% returns. And for this pyramid two, we made we consider this as break even, because we made only 40 odd points in this particular trade, right? So, but we kept on pyramiding our position till the stock is showing strength. That's it. So here you can see we haven't used any indicators, any volume confirmation, any other patterns or anything. We just rely on our simple setup of filtering the stocks for all-time high, and just trailing them using our simple mechanism of 20 EMA and 10 EMA, right? So this is the simplest way to trade. You just need maximum 30 minutes a week to just calculate your levels, and just check at what levels you need to buy and what are your SLs and targets, and your job is done. You just don't need to be in front of the screen the whole week to check what's happening, right? You just need to make sure that your money management and risk management is in place, because this is very important that you don't bet your entire capital on one particular stock, because we don't know which stock is going to perform. You have to allocate your uh, capital to different stocks, right? So you need to make sure that you don't risk more than 1% of your capital on one stock, and decide your quantity basis on that. I will make a separate video on risk management and money management, right? So you need to make sure that you just don't bet your entire capital on one particular stock. You need to have some diversification. Now, one more thing I would like to state here, that we believe in making multi-bagger returns in a very short period of time rather than claiming high CHR by holding for decades. See, the stock is not going to give a rally for 10 years, right? It is going to give momentum or strength only for some period of time, and you need to be in that stock for some period only, the time where it is showing some strength. You don't need to stick to a stock forever, right? You just need to make a perfect entry and a perfect exit. That's it, to make returns. Now if you keep holding this stock forever, then you will be blocking your cash in this particular stock, and miss some other opportunities that are there in the market, right? And also some people might argue that how this strategy will work in a sideways or a bearish market. So tell me one thing, which strategy works well in a bearish market? Which buy only equity strategy works in a bearish market, right? All the strategies for buy equity will work in a bullish market only. But this will make sure that before a very big crash in a stock or in index or due to whatever reason, before any big crash, you will exit your holdings and you will be sitting on cash, right? So be happy to sit on cash if there's no opportunity in the markets. You don't need to be invested every time. You just need to make sure that you make good returns from the markets, right? So thank you everyone. Thank you so much for watching our video. I hope you liked the video. So if you like, please like, comment and share, and subscribe to our Telegram channel. We will be feeling motivated, right? And also in the comment section, please let us know a stock on which you want us to make video. We will try and incorporate all the rules and how it performed historically. Also, we will be making a video on back testing these strategies in future, how we can backtest. And we all the members of the Telegram can join and can join us, how we can backtest, and we can backtest the entire strategy collectively for all the stocks that are there, right? So thank you everyone, thank you so much, thank you for watching the video.